Depositors resurface after rupee stocks fail. Benchmarks come under pressure with the Nifty near 23,700 mark. Broad indices move in tandem with all sectors in the negative territory. Banks and autos lead the losses.
Crude service is weighing on the markets, dragging down the oil-sensitive stocks into Globe, Asian Paints and OMCs like HPCL, BPCL and IOCL are under pressure as rising crude squeezes margins, adding to the mix. A sharp hike in the windfall taxes is set to pressure the refiners as well.
Delhi's draft EV policy proposes an aggressive shift to electric mobility, mandating only electric three-wheelers from 2027 and a full transition for two-wheelers starting 2028. The policy will benefit players like TVS, Bajaj Auto and emerging EV makers.
And Enviro Infra surges after securing nearly 1,000 crore worth of projects in Maharashtra, strengthening its order book and growth visibility. Meanwhile, Jyoti CMC plunges as its French subsidiary faces regulatory scrutiny, including asset seizures and management restrictions.
IKS Health Lips Asset enters advanced talks with to acquire US-based TrueBridge for around $600 million. According to reports, the deal, likely all cash and backed by global banks, aims to strengthen IKS Health's presence in the US healthcare tech.
And so he slips after co-founder Nandan Reddy steps down from the board and exits his executive role to pursue a new venture. The company is reshuffling leadership with internal promotions and a new nominee director stepping in.
The government is stepping up its push for compressed biogas with plans to roll out a 5,000 to 6,000 crore support package for pipeline infrastructure. The move aims to connect CBG plants to city gas networks, reduce import dependence amid geopolitical risk and boost domestic energy security.
Hello and welcome. You tune in to Buy Now Sell Now. I'm Ankita Saxena with me, Kavita Tapliala, and this is your show where we get all your stock-specific questions answered. So you have to start writing in. But before that, we'll take you through the texture of the market and what's really transpiring and what are the stocks that are making news as of now. Well, first up, if you look at the market, of course, it is on a back foot today for obvious reasons. The talks between US and Iran have failed, and that has given a massive spike to the crude oil prices because US Navy blockade on Iranian ports is what is leading to a spike in the crude. It jumped up almost 7 to 8%. It is now trading at $102 a barrel Brent crude there, and on the back of that, you do see, especially the oil-sensitive stocks like the OMCs, whether it is an IOCL, BPCL, HPCL, that's having the effect, or paint companies, pull up an Asian Paints or Berger Paints and so on. Even that is seeing a downtick on the back of that. We also have the tire companies that will be in focus on the back of that. Interglobe Aviation is another counter that is going to see a drawdown today on account of the oil prices. And besides that, we also have for the rest of the market that is trading in the red, though we have managed some bit of a recovery since morning. Nifty has recovered 112 points from the day's low, but nonetheless, it is still trading with cuts of 1.3%. 23,734 is where Nifty is perched at. As far as Nifty Bank is also concerned, we do see some recovery of 300 odd points from the day's lows, but nonetheless trading with cuts of more than 1.5%. And the broader markets are mirroring the benchmarks, though they're trading better. They are definitely performing the benchmark indices. We have managed to recover as far as the broader end of the market is concerned. But let's also talk about the FNO space, FNO 360 that is powered by 5 Paisa. My colleague Sajid is now joining us to give us a lowdown on how the FNO universe is looking like right now. Take it away, Sajid.
Thank you, Ankita, for that. The markets are in a choppy space as we speak, especially because of the Nifty options expiry today. The Nifty is down nearly 1.3% above, hovering about the 23,700 mark, and you're seeing a lot of short positions getting built up with the open interest up nearly 1% in today's trade. Nifty Bank is another index which has seen a sharp cut of 1.74. There is a open interest build up there, but at the same time there is a lot of unwinding which is also happening in Nifty futures, Nifty Bank futures as we speak. Look at what the snapshot is saying. Is showing you have short build up across the board for private sector banks. There is some long unwinding which is happening for SBI and BOB and Bandhan Bank. Otherwise, it's a sea of red with most of the banks in red and adding short positions there. If you look at how the call and put writers are writing for the next week's expiry, you see that there is a lot of activity which is coming in the 23,600 and 2,700 mark and 23,800 mark, and we are seeing at this point in time Nifty hovering about the 23,700 mark with a base of 23,500 as a support and resistance coming at 24,000 as we speak. Futures gainers include stocks which are seeing some long bias, which is Adani Power, Tata Power, and Blue Star. So some of the power stocks are active in today's trade. In the losers, you have stocks like Asha, Maruti, and Union Bank, where there is a short build-up happening, and the stocks are down between 3.5% to 4% in today's trade. There, option open interest gainers basically have Godfrey Phillips, where there's a short build-up happening. The open interest up nearly 14%. Adani Power long build-up happening, 8% jump in open interest, and Wari Energy there is a 7.5% jump in open interest there. Among the losers in open interest, you have CDSL, where there's a long unwinding happening, BDL a long unwinding happening, and CAMS a long unwinding happening. And if you look at that, capital markets play are under pressure in today's trade. Most active stock options, TCS 2600 April call, the stock hovering around the 2480 mark. So there is a strong resistance coming in with that because of the open interest position addition, which is coming at 1.26 lakh contracts which are getting added in that strike. The other most active in the put side is the Reliance 1300 April put, where there's a support which is coming in for Reliance at 1300 levels. The stock above at around 1322 as we speak, and there's an unwinding of some of the positions which is happening, especially the long positions which is there. So the open interest is down nearly 1.57 lakh contracts. So overall, it's a choppy day. You're going to see some more volatility coming in towards the second half of the day as we come close to the Nifty options expiry.
All right, Sajid, thank you so much for all that update and getting us a roundup of the F&O segment. But then let's shift focus to what's making headline today. Delhi's draft EV policy proposes an aggressive shift to electric mobility, mandating only electric three-wheelers from 2027 and a full transition for two-wheelers starting 2028. Now, the policy will benefit players like TVS, Bajaj Auto, and emerging EV makers. But then let's discuss more on this. We're also joined by Mr. Mahesh Babu Subramanian, Managing Director, Olectra Green Tech. Hello and welcome to the show. Let's begin with understanding the policy shift and the intent over here. Is this a response to a very strong industry lobbying, or we are looking at practical implementation challenges which are trying to be addressed through this new draft norms?
I believe it's a very positive and forward-looking clear policy by Delhi government. Many other EV policies, many states have launched in the past. I think the new Delhi draft EV policy is, I would say, the best among all. The intention is to also incentivize consumers to adopt to EV and also mandate electric adoption over a period of time. I think it is important that Delhi government has worked very closely to reduce pollution and also bring in clearly clean air initiatives in Delhi. I think EV will play a very vital role since the tailpipe emission is zero. I think it will play a vital role. What I like the most is even the school buses and some of the public transports gets incentives apart from two and three wheelers. There is a potential that a huge amount of reduction can happen in pollution in terms of 2030. Clearly, there is a vision and clear policy for next 4 years given by the government, both by incentivizing as well as mandating electric mobility. I think it is one of the best policies till now which has come in the states. Other states also equally have policies, but mostly incentivizing but not mandating. I think this is the first policy which mandates electric adoption over a period of time.
And Mrs. Subramanian, hi, good morning. This is Ankita also joining in. Mr. Subramanian, this entire EV policy, movement it started in 2015. Since then, how quickly has the EV adoption been on ground? Because there have been concerns over whether it is the battery life or whether it is the infrastructure for EV adoption. What are really the challenges right now as far as EV adoption is concerned? Because that is something that needs to be addressed before the EV adoption actually accelerates.
Yeah, well, I'm in the auto industry for 30 years. I'm lucky in the last 10 to 12 years I've been in the EV industry. I've seen the transition from 2014, from the FAME 1, FAME 2, now PM E-Seva, PM E-Drive, and all the policies. In fact, the first state policy came in Karnataka, and then every state had a policy on EV. I think Delhi had a very good policy till now. And the new one is even more promising. There are many challenges in EV, but most of them are being put aside. The life of batteries was one of the challenges in 2015 when we launched electric vehicles. But I think now it's very clearly, even Electra has run about 8 lakh kilometers for some of the vehicles. And more than 6 to 8 years, we have been running the vehicles. So there is a clear technology adoption, I would say, acceptance by the customers in the market. If you look at segment by segment, each of the segments had different challenges and adoption. If you look at three-wheelers, I think today we have more than 50% adoption. That's a very good, clear case of both ease of driving as well as economics playing a vital role in converting to electric. If you look at electric buses, I think government is very specifically bringing in because these buses in the cities run a lot, and hence electrification of that in either FAME 2 scheme or PME Drive or PME Seva. I think multiple schemes have been launched by the central government, and also many state governments have now consistently have been releasing EV tenders for electric buses. Because of sheer economic cost, and now all the teething issues, many of them have been resolved, and the market is ready to scale up in a very large way. Two-wheelers is a very clear push by the government. Initially, new entrants played a role, but I think clearly the big players have understood and they have come up with very good products, and now two-wheeler industry is moving towards a very healthy adoption of EV, and year on year, a good CAGR of 45% plus. Just leaves the commercial vehicle trucks alone. I think trucks is starting to adapt now. I strongly believe that in next, by 2030, trucks EV will become a mainstream player like what has happened in two and three-wheelers. In cars today, the biggest advantage is EV is no more a niche segment. It is one of the alternative fuel available in the dealership, like your gasoline, but diesel. I think that's the main kickstart. While there are many challenges in EV in last 10 years to adapt, I strongly believe what we have achieved is a very far-reaching success, both for industry as well as to the government. And thanks to the consumers who have been working closely with the EV industry, and we are very clear that right now the EV adoption is going to be a continuous process over a period of time.
Right. One small rationale that we would like you to explain us, how exactly does the revised formula, we're talking about lower slope and higher base, alter emission limits across vehicle weights? If you can just help us understand this.
See, EV has no tailpipe emissions. So basically, the EV energy efficiency depends on weight of the vehicle and the consumers and the passengers. So while there are many policies coming on gasoline and diesel in terms of vehicle weight-based emissions, EV has a zero tailpipe emission. The emission which we are looking at, electromagnetic interference and radiation. So that is nothing to do with it. And most of the vehicles comply by it. And we are very clearly technologically advanced in terms of tailpipe emissions in the cities. So it's completely different, and the adoption which has been given in wide range in Delhi EV policy between two-wheelers, three-wheelers, commercial N1 vehicles, and also school buses mandated to 10% to over a period of 30% in 2030 is a very, very clear mandate that every segment of mobility in the capital, NCR, needs to get moved to electric. I also believe it's like a lighthouse effect. Sometime back, we have been talking about Niti Aayog in EV adoption in terms of lighthouse effect, where one city adopts electric, everything, we make a success story and all other cities follow. I think with the new EV policy, Delhi has the chance of being a lighthouse city after this EV policy.
Right, Mr. Subramanian, thank you for that. But hang in there. We also have Gaurang Shah, who's the Senior Vice President, Geojit Investments, who's not joining us. Hi, good morning, Gaurang. And, amid this market texture, the one pocket that's really in the green, quite literally and figuratively, is the green energy space or the EV space, because of the draft policy that's come through. And of course, Geojit has a positive stance on Electra Green. Post this Delhi government EV policy, what is the upside that you see for Electra Green going ahead?
Thank you so much, Ankita, for having me on this show. Good morning to all your viewers, to Mr. Subramaniam, and to you and to Kavita. We've been maintaining a positive stance on Electra Green Tech for quite some time. My sense, and as Mr. Subramaniam was just referring to, so my sense is that after the changes what the Delhi has put in place, I think, and there is also a demand from this industry that policies need to change to make it more lucrative and beneficial in terms of offtake of month-on-month numbers as far as the sales of electric vehicles are concerned. So I think this will open up a broader perspective in terms of other states also revisiting the EV policy that they have, not only restricted to two-wheeler, three-wheeler, four-wheeler, but more so for commercial vehicles. So we have been maintaining a positive stance. Now, with your permission and with the permission from Mr. Subramaniam, I wanted to ask him 2-point question if he is able to take the questions. May I please ask those 2 questions? Hi, Mr. Subramaniam. Morning. This is Gaurang Shah from Geojit Investments. So there was a report, news-based report, of course, this was not confirmed, that there was an issue in terms of the production backlog. Now, whether that production backlog has been resolved and you are back to normal. And the second point was, there was also a news item which I read some time back that you are also working on some advanced battery, which normally would be a short charge and long play. That means it will charge in a shorter period of time and it will be available for a longer kilometer, a better average. So if you could please highlight on these 2 points, if there is clarity. Thank you so much, Mr. Subramaniam.
Firstly, as you know that we have launched the blade battery technology, which is one of the latest in the commercial vehicle segment. We have launched 2 models, 12 meter and 9 meter, both on the advanced chemistry of blade battery in the commercial vehicle segment. That is the advantage we have in terms of technology and customer value. We give a very long life of the vehicle and safety, and hence these vehicles are about 8 to 8 years and about 6 to 7 lakh kilometers of usage in terms of warranty. That's the advantage we have launched. Thanks for asking the question. On the backlog of the vehicle, I think delivery consistently we have been doing in the last 2-3 quarters, consistently increase in delivery. The backlog we have is mainly on terms of Maharashtra delivery, which we are planning to do it in before 2027. We are also winning new tenders, which is part of the CESL tender. Last tender, we won about 1,780 vehicles. We are planning to deliver them in FY 26-27. The orders will continue to come in. Our strong delivery continue to grow quarter on quarter.
Mr. Subramanian, before we let you go, a quick question of how this will translate for Electra Green Tech in terms of the near-term order inflows, and how big is the government fleet opportunity now?
See, the government fleet opportunity is already driven by PME Drive and PME Seva tenders, which we are already participating. The new EV policy brings in private into the system. The biggest park of electric buses is in the school and college sector. I think this is the first time the state government is clearly making mandated EV adoption in this segment, which will really open up the new private space. As you know that the government and public transport order is only 20% of the whole bus market, 80% is private market. I think with this new policy, it clearly says there is a push towards EV in terms of private adoption as well. I think that is a breakthrough which we strongly feel there is in the coming years, by 2030, we will have a substantial private adoption in electric mobility coming. And that's a very positive sign to us.
All right. I think with that, we will let you go. Mr. Subramanian, thank you so much for speaking to ET Now today. Thank you.
Thank you.
All right, so that was all about the new draft norms on the EV. But then it's time for a short break, and post that we'll start our viewer query session. Gaurangsha has already joined us. We'll also be joined by Jigar Patel to answer all of your stock-specific questions. And before we slip into that break, the number flashing, WhatsApp number flashing once again on the screen. Welcome back. You're watching Buy Now, Sell Now, where we'll start answering your stock-specific questions. Gaurangsha has already joined us, and now joining us is Jigar Patel. Jigar, hi, good morning, and welcome to the show. We're also joined by our viewer, Dimple from Mumbai. Dimple, hi, good morning.
Hi, very good morning to you.
Please ask your question.
My query is regarding should I enter right now for Asha Motors for long term
Sure.
or any other recommendation for long term from the experts?
Okay.
Thank you.
Same sector, any other recommendation or different sector?
Any other would be fine for 1 or 2 for 2 years.
For 2 years. Okay, let's take a take from both of our guests. Gaurang, I'll start with you. Asha Motors.
First of all, the small disclosure, Kavita, all recommendations that I'll be sharing with you on your show this morning are part of our fundamental research team recommendation. Our company, Jurjit or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we give advice to our clients on similar lines. They might have their investment interest. So, question on Eicher Motors, I think amongst the two-wheeler, two-wheeler premium play, along with commercial vehicle in form of Eicher trucks and a JV with Volvo. There was a fear when 400, 440cc motorcycles were launched in collaboration with Triumph and Bajaj, and Harley and Hero MotoCorp, but the numbers don't seem to die down for Eicher Motors. Demand is still robust month on month, and export market is also equally strong, and it is going to emerge much more stronger. From a long-term point of view, she has a long-term time horizon. I would definitely advise a buy on Eicher Motors. So one request is that don't put all your money at one time. We are still living in uncertain times with respect to the Middle East geopolitical situation. So start at current levels, depending upon your risk appetite, 15, 20, 30%, and add-on dip should be the strategy. Any other sector she has also mentioned and her interest, I think financials, Kavita, would augur extremely well with the kind of business update that we got for the fourth quarter last financial year. One pick from the PSU Bank will be the frontline largest bank in India, State Bank of India. Another pick from the banking private space would be Axis Bank. I think these three should augur well. So if you have a particular amount of capital, I would say distribute proportionately into 3 parts and start nibbling in.
Right. So current levels buy in Asha Motors, Axis SBI recommendation on the finance space. Jigar, any specific entry levels that you want to recommend?
Very good morning, everyone. See, in Asha Motors, currently we had a very large move from the bottom of 6,500 and currently trading near 7,100. So the next support is expected near 7,000 level. So 7,000 level would be a very a lucrative level to add for at least 3 to 4 months view. And on higher side, we can expect at least 7,800 within 3 to 4 months time.
All right, so that's the take on Asha Motors and the levels for entry. But let's move on to the question that's coming in on WhatsApp now. The first question is coming in from Osan Reddy, who's writing in from Hyderabad. He says he holds Sona BLW 500 at 500. He wants to know if he should sell and buy Maruti Suzuki instead. Please advise. Okay, so let me come to you again, Jigar, for this. He's not given his holding period, but as of now, at these levels, he's bought Sona BLW at 500 rupees. He's already made his profit. Should he now sell and probably enter Maruti Suzuki?
Since Sona BLW, I guess he has to, hold as of now because the current structure is turning bullish. And in current week, we have seen a breakout above 550 zone and currently sustaining above that. And even RSI is making a higher high formation on weekly chart. So I assume and I expect that within next 2 to 3 months, we may see 650, 660 levels. So at current levels, he may also add at this level and keep a stop loss below 500 and a target of 650, 670.
That's a take on Sona BLW. Next question is a WhatsApp question from Bhagwan. He's from Mumbai and he's bought 300 shares of CESC at 173 and 300 shares of GSFC at 215. He can hold for a year almost. And he wants to know for any other stock. He also has one more buying intention for the period of 6 months. Gaurang, I'll come to you first. CESC and GSFC.
6 months is a pretty short time frame,
That is for a year.
Not...
This is for a year. And the other recommendation is for 6 months that I'll take from Jigar.
Sure. So CESC, we used to have coverage, Kavita, but our targets were in place. So we have not continued with the coverage. But the sector, we are positive, that is power generation. And this player also happens to be not the, not so very big, but mid-size kind of a player, CESC. Positive on power generation, Tata Power, NTPC, Torrent Power, and JSW Energy. As a disclosure, this morning in our company's YouTube channel, Geojit Spotlight, I have given Torrent Power as an investment idea from a long-term point of view. On the other one, fertilizer stock, we don't have coverage, so I'll give it a pass.
All three recommendation from you? GSFC, CESC, and other stock for 6 months. Jigar, you want me to repeat the question?
Actually, I missed it. Can you repeat the question?
Yeah. CESC bought at 173 and GSFC bought at 215. Wants to hold for a year, but then one more recommendation for 6 months.
See, first of all, in GSFC, I would recommend to wait and watch as of now because the major resistance is seen at 170. If it is not crossing 170, then I would recommend to exit at somewhere near 168, 169 zone. For that, he needs to wait for at least 1 or 2 weeks time. In CESC, again, there is a sideways kind of move. Consolidation is seen near 165 till 150 zone, but overall the structure is bullish, so I would recommend a hold, or even at current levels he can add and expect a target of at least 178, 182. And the next pick which I would recommend in this fertilizer space is Deepak Fertilizer. See, in Deepak Fertilizer, there has been an inverse head and shoulder breakout near the bottom of approximately 950, 1000 zone. And even the long-term charts, especially on weekly chart, there has been a bullish divergence, hidden bullish divergence with the trendline support. So there is a massive place to go on higher side. So the target for Deepak Fertilizer would be 1,350. The view will be 3 to 4 months, and stop loss can be placed below 950 on weekly closing basis.
All right, so that's the view coming in on Deepak Fertilizers. But let's move on to the next question. This is Vijay, who's writing from Dubai. He says he's bought 189 shares of HAL at a buying price of 4,000 rupees. As a long-term investor, should he sell or should he start averaging in on HAL? Okay, Gaurang, he's a long-term investor. He's bought HAL at 4,000 rupees. Should he hold on to it? He's sitting at a very marginal profit right now. But for the long term, do you see more upside for HAL, and should he be holding on to this stock now?
So, Ankita, first, let me give you a brief about the sector defense. We remain extremely positive on the defense sector. And I think growing order book, not only from the domestic market, but export market also is opening up as a big opportunity for the defense sector. Some of the companies on which we have coverage as a disclosure is BEL, MTAR Technologies, and Mazgaon Docks. Now, Hindustan Aeronautics Limited, as we all know, manufactures Tejas aircraft, fighter jets, along with Prachand light combat helicopters. There were some small glitches in the recent time, technical glitches, which have been sorted out. Tejas Mk1 is a huge opportunity for Hindustan Aeronautics Limited, along with a futuristic 5th, 6th generation light combat aircraft in form of Tejas Mark II. Expect that the order book will augur well. Unfortunately, I won't give you specific in terms of buy, sell, and hold because we don't have a coverage. But this company, HAL, happens to be one of the strongest plays in the defense pack.
All right, so that's the advice coming in on the specific counters. But it's time for a short break. Post that also, we continue your stock-specific questions being answered by our experts. Stay tuned.
Welcome back. You tuned into Buy Now Sell Now, a show where we get all your stock-specific questions answered. The number is flashing on top of your screens. Keep writing into us and we'll start taking in your queries. But now we're joined by a live caller, Narveer Jadhav, who's joining us from Hyderabad. Hi, good morning, Narveer. And how are you this morning?
Yeah, hi, good morning. I'm fine, thank you. And how are you?
Very well, Narveer. Tell us what's your question.
See, basically, I bought a Tata Motors passenger vehicle at the rate of 303 rupees 80 paisa. Almost 10,000 shares at a time I bought it. Keeping in the mind, stock might have bottomed out. And I can hold easily 1 year, or also I can extend to 2 to 3 years. So regarding this, I would like to know what could be the target price for 1 year and 3 years. So regarding that, I have a query, and is it good stock to hold? Because I'm thinking the price is at the best price I got it.
All right. So Tata Motor passenger vehicle, he's bought it at 309 rupees. Gaurang, I'll come to you. He wants to know the target for the next 1 year or 3 years. He's willing to hold it, but he wants to know if this is fundamentally a good stock to hold as of now.
So, Ankita, we used to have a positive coverage on combined entity when it was a combined entity in form of Tata Motors Limited. Then the company was split into two, Tata Motors PV and Tata Motors CV. Currently, we have a positive coverage on Tata Motors CV. I think Tata Motors PV is under review, so I won't be able to give a specific, but whether he got in at a attractive level, 309, I think the downside is protected from that. I won't be able to give specifics on Tata Motors PV because it is under review, but yes, the trade agreements that India has signed with various countries, and I believe on 24th of April, India and New Zealand will be signing a FTA, free trade agreement. So this opens up a lot of opportunity for auto sector as such, whether it is two-wheeler, three-wheeler, passenger vehicles, commercial vehicle, etc. There was an issue with the high-end segment, JLR, Jaguar Land Rover, but the company is overcoming that. That was visible in the third quarter earnings, and I hope the fourth quarter earnings that the company will deliver will be a shade and a color better than what we've seen in the third quarter. Domestic corporations in terms of Tata Motor passenger vehicles, offtake of vehicles month on month, augurs extremely well. The recently launched Tata Sierra has attracted a lot of booking, and that booking not only translated into deliveries, but there is a strong demand for this particular vehicle and other vehicles also. They've been consistently upgrading their portfolio as far as EV is concerned, offerings. So it's a good, strong player in the auto sector. I would give it to Jigar in terms of target price because I'm not in a position to give specifics since it is under review.
So tell us, what are your targets for the next 1 year? 3 years would be a bit of a stretch, but for the next 1 year, what will be your target for Tata Motor passenger vehicle?
See, first of all, the buying price is very lucrative, 309. And one thing I would like to highlight for Tata Motors passenger vehicle is that there has been a 3 major corrections since 2028 till date in Tata Motors. The first was around between 2006 and 8, exactly 86%. And from 2016 till 2019, exactly 89%. And from July 2024 till date, almost 80%. So he has bought at a very lucrative level. And since then, the rally has been very massive, 2,200% rally from 2008 till 2015. And right from COVID till 2024, it was somewhere near 1,600%. Provided on weekly chart, there has been a massive divergence seen exactly near 78.6% retracement from COVID low till July 2024. So I would suggest him to hold at this point of juncture, and even I would like to advise to add more at current levels. And 1 year target would be somewhere near 200-week exponential average, which is 592. And if it is surpassing that level, then 750, 800 would be the target for next 3 years.
All right, so those are the levels to watch out for Tata Motor PV. But, there's Akshay also who's writing into us. He says he had bought Tata Motors at 789, and this was before the demerger happened. He wants to know now whether he should sell passenger vehicle shares and invest in commercial vehicles, and should he wait for a better time to do that? Gaurang, let me come to you for this.
This is a bit of a dilemma, honestly, Ankita, because we have, like I mentioned, we have positive coverage on Tata Motors CV, and I think the CV business is doing extremely well in terms of positivities. Numbers are also better month on month. Uh, Whether to sell Tata Motors PV, again, since it's under review, I believe I won't be able to give specific, but the commercial vehicle business for not only Tata Motors, even for Ashok Leyland, Mahindra and Mahindra, Eicher Motors, and likewise other, EV commercial vehicle manufacturing companies like Electra Green Tech, on which we have positive coverage. Month on month numbers have been looking very strong, and I think that should translate into positivity as far as earnings is concerned.
All right. With that, it's time for a short break, but then post that more questions coming up. So stay tuned and keep sending us the questions. Welcome back. You're watching Buy Now, Sell Now, the last leg of the show where we're answering your stock-specific questions. Gaurang Shah, Jugar Patel, our guest on the panel live today, and we are joined by Mr. Ghosh from Delhi, our live viewer. Mr. Ghosh, hi, good morning.
Hi.
How are you, sir?
I'm absolutely fine. Getting your phone is an excitement. Very much excited.
Excited to talk to you as well. Please ask your question, sir.
And my favorite analyst, Mr. Gaurang, is on the TV.
Oh, lucky day for you.
I don't miss on Monday. I know him for the last 15, 20 years.
Oh, lovely.
He's still looking very young. Only the hairstyle has changed a little bit,
Oh, wow. That's quite an observation, Gaurang.
He used to have thicker hair. Now it has gone short. He's fantastic. He's really fantastic.
Thank you so much.
Great, sir. So you can ask your question.
Well, actually, I've got a lot of shares. You know me, I'm Ghosh Dada, and I have got 85 scripts, So what I do is, I'm a senior citizen, 77 years old, and share market is a pastime for me. Okay? So what I do is, because of this fellow, all the shares have gone down quite a lot, So my jo share mujhe lagta hai is not good and bad. I'm just selling it. So I'm getting a lot of money from there, and I'm putting it to maximum in L&T. And Mahindra, HDFC Bank, State Bank of India, and some other shares, which are very good shares, and they are also recommended by you also, and Kunal also. So am I doing the right thing?
All right. Can I call you Ghosh Dada?
Yes, you call me Ghosh Dada.
Okay. Okay. So Ghosh Dada, you mentioned that you are putting money for time pass, you're retired. How do you manage? Do you take care of your portfolio on your own? I mean, I'm sure there must be some homework that...
Beti, suno. I'm a retired from Merchant Navy. I was the chief engineer in Merchant Navy.
Okay.
I started my business in 2019 when I started my business.
Oh, lovely.
In India, I find that business is very difficult to do. There's so much of corruption. So much of corruption. I had two companies. I'm a director of Tech Services and Private Limited.
Wow.
I was doing extremely well.
Wow.
But I could not bribe. I could bribe people, but I cannot give duplicate material. I cannot give cash.
Got it.
So I left everything. I got into share. I told my wife that either I go back to ship, I start with something of mine. Then got into share market.
Oh, lovely.
So चोर से भाग रहा था, फिर डाकू के बीच में आ गया. So I've learned from a hard way. Today I'm doing very well.
Okay.
Today मैं बहुत अच्छा कर रहा हूँ because I understood a lot of things. Then people like Gaurang is there. The one Mukherjee was there, and then
so nice to learn so much from your experience, Ghosh Dada. Gaurang, what's the advice for him?
Well, first of all, Kavita, let me salute Ghosh Dada. And he definitely is a seasoned investor. And I have no apprehensions or any this thing that he is more seasoned than what I am. And thank you very much, Ghosh Dada, for all those kind words that you mentioned. Regarding my hair, just last week I had my hair cut, so that's why I'm looking a little bit shrinked in terms of my aura that was with a lot of hair around. Thank you so much, Ghosh Dada, and it's really a pleasure to talk to you. And thank you very much for all those kind words. I actually don't know the number of scripts that you have. I'm sure you would be having multiple scripts in your portfolio. And a lot of time, Ghosh Dada, what happens is that, you end up diversifying a lot, and then it becomes very difficult for tracking all those investments in terms of performance and what is adding to your portfolio profitable or what is not adding to your portfolio, which is loss making. The names that you have listed down, about 5 or 6 of them, as a very disclosure that we have positive coverage on all of them: BEL, Axis Bank, M&M, I think there were a couple of other L&T. I would say that, Ghosh Dada, bring it down. I don't know actually how much your portfolio totals to, but bring the scripts down to maybe about 10, 15, or maybe max 20, depending upon what the size of your portfolio is, and trim down the noise in the portfolio in terms of non-performing stocks and add to the performing ones. And thank you once again, Ghosh Dada, for all those kind words. Really appreciate it.
All right, I hope Ghosh Dada's questions were answered by his favorite Gaurang, but let's move on to the other questions that have been coming in on WhatsApp. This is Rekha who's writing in. She says that she's currently, she has 2 lakh rupees to invest. She wants a suggestion for 5 stocks or sectors for the next 5 years. So that's a long time horizon. So I'll come to you, Gaurang, for this. She wants 5 sectors, of course, upcoming sectors. And if you can name a few stocks for her, she has 2 lakh rupees to invest. How should she diversify her portfolio?
Well, Ankita, 2 lakhs and 5 stocks. Again, I was just referring to Ghosh Dada. You don't need to do too much of diversification, because then it becomes difficult to track. So if you have 2 lakhs of rupees, I think max 3 would be enough, according to me. And I would definitely advise her to invest in stocks like BEL, that is a defense play. Ashok Leyland, again, a disclosure, we have a positive coverage over there. And amongst the NBFCs, L&T Finance. I think these 3 should suffice, and divide 2 lakhs into 3 equal parts and invest accordingly, proportionately in all these 3 names. Don't put all your money at one time. Start at current levels, and on dips, you can definitely add to it.
All right, so that's the take. And with that, it's time up also. Thank you so much, Gaurang and Trigger, for being on the show and helping our viewers with their stock-specific questions today. Thanks. And before we sign off, India lost one of its greatest voices, Asha Bhosle, who was an era in herself. At 92, she leaves behind a legacy that few artists in the world can ever match. We have Arunil joining us live from her residence. Arunil, over to you.
Well, at present, I'm reporting from the Lower Parel residence of late Asha Bhosle. This is where the people from the film industry, sports personalities as well. Sachin Tendulkar was here to offer his last tribute to Asha Bhosle. CM Devendra Fadnavis was at her residence yesterday evening. Today at around 4 p.m., her mortal remains will be taken to the Shivaji Park crematorium in Dadar, where the final rites will be held with full state honors. At present here, the family members of the Mangeshkar family, Mangeshkar legacy, are here basically receiving all the dignitaries as they come here to pay their last respect. Asha was unwell because of age-related issues and was admitted at the Breach Candy Hospital, where she unfortunately suffered a cardiac arrest. Basically, the whole of the nation is mourning, but at the same time, we also need to rewind to the latest statement of Asha Bhosle, wherein CM Devendra Fadnavis was also present, and what she said is like, I may be no more, but my songs will be there. My name symbolizes, Asha symbolizes hope, and in the form of hope, my songs will remain in the minds and hearts of my fans. She started at a tender age of 9, so she has served India's music industry for around 8 decades. Also holds the Guinness Book of World Record for most number of recorded albums. What also stands out for Asha Bhosle is she's the younger sister of a legendary singer like Lata Mangeshkar. She's a legend herself, but what she said is that I did not wanted to get typecast as the younger sister of Lata Didi. I did not want to sing like her. My voice should not resemble her because people will not recognize me as an individual, and that is why I tried to learn different forms of singing, be it cabaret. I tried to listen to more Western music, and later also I tried to learn ghazal, as well as I tried to learn different forms of singing so that I could make my own mark. And indeed, she was able to do that in these 80 odd years that she has served India's singing industry, India's music industry. She is no more now, and people from various fraternities, people from across the country are coming here to pay their rich tributes. We have seen fans have been putting up social media posts, have been writing about Asha Bhosle, that what kind of a tremendous mark she has made in their lives with the help of her singing and her music.
All right, thank you so much for joining us from Srimati Asha Bhosle ji's residence. A lot of celebrities did turn out to pay their homage to the celebrity singer. But with that, before we wrap up, we'll take a quick look at how the market is shaping up at this juncture. Well, the markets have been on the back foot, but we do see buying that's coming in on the dips. So we are, off the day's lows. In fact, we are up almost 150 odd points from the day's low as far as Nifty is concerned. 23,781 is where we are at. Nonetheless, trading with cuts of 1% there. Nifty Bank was seeing the sharpest knock in the trading session, especially the PSU banking names that were down more than 2.5%. We are seeing a recovery coming in on the banking pack as well. We are up almost 330 odd points from the day's lows, and the broader end of the market is outperforming the frontline indices. Mid and small caps both trading with cuts of more than 0.5%, but nonetheless outperforming the benchmark indices. But we also have Snehi now, who's joining us to weigh in on the whole host of brokerages who are split on the bull and the bear side for Avenue Supermart. So let's go across to Snehi, and she's going to walk us through all of that. Take it away, Snehi.
Well, yes, so the stock in focus is Avenue Supermarts, or as we know it, D-Mart. A whole bunch of brokerage notes over the last couple of weeks since the Q4 update was released. Most of them have been positive in nature, like JP Morgan, Bernstein or BofA Securities. But today, the note that we're seeing is coming in from the house of MK, wherein they've initiated a sell with a target price of 3,700 rupees per share. On the flip side, if I have to talk to you about the bull case, like I just mentioned, multiple brokerage notes coming in. And in fact, BofA Securities has upgraded the stock to a neutral rating with a target price of 4,525. So convergence on both sides. MK is flagging off a downside of 19%. On the flip side, BofA Securities sees an upside of 3%. So yes, that's the bull versus bear case on what the brokerages are making of this stock. Let's talk about valuations now. For the bear case, MK says that D-Mart has risen by roughly 20% in its stock price in the last fortnight alone. It trades at a one-year forward price to earnings of 70 times. They believe that valuations are already baking in sustained pickup in SSSG and network expansion, and there's not much upside from here. To which JP Morgan also says that premium valuation that we're seeing on the stock right now will likely sustain. So again, contrasting news coming in on the valuation front too. Let's shift focus, talk about the third metric, that's the expansion plans and the store addition plans they have. MK says that yes, the store additions have been robust. The capex per store has risen from 8,000 rupees per square feet from FY14 to 22 to now 14,000 in the last 3 financial years. So that is something that they're flagging off. And they say that increased need for store investments is deteriorating the return on invested capital, ROIC profile. On the flip side, if you take a look at the bull case, D-Mart has closed FY25 with 85 new stores. Overall, they've managed to hit that 500 store count number. In FY26, they forayed into Eastern India with a store in Odisha. They forayed into Uttarakhand, into Goa. These are new territories. So this business is going to get a further moat and a pickup from all of these new geographies. And in fact, Bernstein is estimating that by FY35, D-Mart will reach 1,000 stores compared to the 500 now. So they're seeing a doubling happening by FY35. So that's the bull and the bear case on stores. Let's talk about competition from quick commerce. This has always been a big concern for a stock like D-Mart. The bear case is MK says that D-Mart's core USP is failing. Value, assortment, experience and availability are all offered by quick commerce players. So there's nothing that's actually making D-Mart stand out. To which Bernstein has said that quick commerce competitive intensity for D-Mart has peaked. The worst is behind D-Mart, and D-Mart's value proposition and customer base seem to be different from those targeted by quick commerce platforms. So quick commerce shouldn't be a problem for D-Mart going ahead. Very quickly, let's talk about the same store sales growth. For the bear case, MK says that they do not expect any meaningful pickup in SSSG. For the bull case, Bernstein says that the triple SG will revive from here. The worst is behind us. The base effect of weak same store sales growth should also aid D-Mart going ahead. And SSSG will pick up with rising inflation and more presence in tier 2 cities as D-Mart expands into further geographies. View on margins. On the bear side, MK says that gross margins are under pressure and flat EBITDA per square feet is expected in the near term. Bernstein believes that margin expansion is expected as operating leverage will start kicking in post their investment phase. And lastly, let's quickly talk about what the projections are by the brokerages. MK on the bear side says that they see an EBITDA CAGR of roughly 19% over FY25 to 35, held by 6 to 7.5% of sales growth, 13% store expansion and 200 bips margin gain. On the flip side, on the bull case, positively, BofA says that they have raised their FY26 to FY28 revenue estimates by 1 to 4% and earnings estimate by 1 to 3% following the strong Q4 trading update from D-Mart, and their estimated consolidating revenue to earnings CAGR is between 20 and 23% over FY26 to 28. So yes, the scales are heavy on both sides, on the bear as well as the bull case, but yes, there are more notes in favor of the bullish side other than the one that MK has released today on the bearish side, and that's a very intensive, very detailed lowdown on the bull and bear case on D-Mart.
In association